Good morning. Whether you're grabbing a coffee on your way to work, picking up groceries, or shopping for something special, chances are you'll reach for your credit card. It's become second nature. Just a quick tap or swipe, and you're on your way. Let's talk about something we all do, paying with a credit card. It's so common that we rarely stop to think about what's really happening each time we use that little piece of plastic. That card in your wallet is more than just a convenient way to pay. It's your ticket into a vast, invisible network that connects millions of people and businesses around the world. Companies like Visa and Mastercard are the gatekeepers, making sure every transaction is fast, secure, and reliable, no matter where you are. Every time you tap, swipe, or insert your card, a complex digital process springs into action. Your bank, the merchant's bank, and the card network all communicate in a matter of seconds to approve your purchase. It's a technological marvel that most of us take for granted. This seamless system powers the engine of modern commerce, allowing businesses to serve customers quickly and efficiently. But behind the scenes, there's a hidden cost that affects everyone. Merchants have long argued that the fees they pay to accept credit cards are too high. These fees, often invisible to shoppers, can eat into small business profits and even lead to higher prices at the checkout for all of us. For nearly 2 decades, this battle over fees has raged on, involving billions of dollars and raising big questions about fairness, competition, and who really pays the price in the end. Now, after years of negotiations and legal wrangling, Visa and Mastercard are on the verge of a major settlement with merchants. This deal could change the way credit card fees work, and it might even reshape how we pay and what we pay every time we shop. So, what's really at stake here? And how could this settlement impact your wallet, your favorite local businesses, and the future of paying with plastic? Let's break it all down and see what the future might hold for the power of plastic in your pocket. At the heart of this fight is the interchange fee, or swipe fee, a percentage of every credit card purchase that merchants must pay. This fee is not just a minor inconvenience, it's a significant cost that affects the bottom line of every business that accepts credit cards. Whether you're buying a cup of coffee or a new television, a portion of what you pay goes directly to covering these fees. For a $100 grocery bill, a store might lose $2 to these fees. While $2 might not seem like much, it quickly adds up, especially for businesses with thin profit margins. Over time, these fees can amount to thousands of dollars, impacting the store's ability to invest in other areas like employee wages or store improvements. Most of that money goes to your bank, funding fraud protection and those popular rewards programs. These programs, while beneficial to consumers, are not free. They are funded by the fees collected from merchants, creating a cycle where the cost is ultimately passed down to all customers. Visa and Mastercard set the rules and rates, profiting from the sheer volume of transactions. These companies have a significant influence over the payment industry, and their policies directly impact how much merchants have to pay in fees. The more transactions they process, the more they earn, creating a system that benefits them at the expense of merchants and consumers. For small businesses, these fees add up fast, sometimes becoming one of their biggest expenses after rent and wages. This financial burden can be particularly challenging for small business owners who are already operating on tight budgets. The high cost of these fees can limit their ability to grow and thrive. To cover these costs, stores often raise prices for everyone, not just credit card users. This means that even if you pay with cash or a debit card, you're still indirectly paying for the convenience of credit card transactions. The increased prices affect all customers, making everyday items more expensive. Even cash and debit customers end up subsidizing credit card rewards. This hidden cost is built into the price of nearly everything you buy, making it an unavoidable expense for all consumers. The rewards programs that benefit some are funded by the higher prices paid by everyone. It's a hidden cost built into nearly everything we buy. From groceries to clothing, the impact of these fees is widespread, affecting the cost of living for everyone. This hidden expense is something that most consumers are unaware of, yet it plays a significant role in the overall cost of goods and services. That's why merchants have pushed so hard for change. They are advocating for lower fees and more transparency in how these fees are set and collected. By raising awareness and pushing for regulatory changes, merchants hope to reduce the financial burden on their businesses and, ultimately, on consumers. The fees may seem small, but across millions of transactions, they have a huge impact. The cumulative effect of these fees can be staggering, amounting to billions of dollars each year. This significant financial drain affects not only businesses, but also the economy as a whole. And ultimately, we all pay the price. Whether through higher prices or reduced services, the cost of interchange fees is something that affects everyone. By understanding this hidden cost, consumers can better appreciate the challenges faced by merchants and the true cost of credit card convenience. The legal battle between merchants and payment giants began back in 2005, when a diverse coalition of businesses, ranging from local mom-and-pop shops to massive national retailers, joined forces to challenge the overwhelming power of Visa and Mastercard. For years, these two companies have dominated the credit card processing industry, shaping the rules and costs that every merchant must follow. Merchants argue that Visa and Mastercard operate as a duopoly, leaving them with little choice but to accept whatever fees and restrictions are imposed. Many business owners feel trapped, forced to pay high transaction fees just to stay competitive and keep their doors open. The heart of their complaint centers on two main issues: the so-called swipe fees, which are among the highest in the world, and anti-steering rules that prevent stores from guiding customers toward more affordable payment options, like cash or debit cards. Because of these rules, merchants are unable to offer discounts for using cash or debit, nor can they refuse to accept premium credit cards that come with even higher fees. This means that every time a customer chooses a rewards card, the merchant pays more, often without the ability to recoup those costs. The system is all or nothing. If a store accepts Visa, it must accept every type of Visa card, including the most expensive premium and rewards cards. This policy leaves merchants with no flexibility to manage their expenses or negotiate better terms. For many small businesses, these mounting costs can be overwhelming. Owners spend countless hours reviewing statements and strategizing how to offset fees, but their options are limited. The lack of flexibility is a constant source of frustration, especially for those operating on thin margins. Visa and Mastercard defend their practices by saying that the fees help fund security improvements and technological innovation. But for merchants, the reality is that they have little power to negotiate or push back against these global giants. Over the years, there have been several settlements aimed at addressing these concerns, but the fundamental struggle remains unresolved. Who gets to set the rules, and who ultimately bears the financial burden? Now, with a new settlement on the table, there's hope that the balance of power could finally shift. Merchants are cautiously optimistic that they might gain more control over how they accept payments and what they pay in fees. This fight is about more than just dollars and cents. It's about who gets to shape the future of retail, and whether competition and choice can thrive in a world dominated by a few powerful players. The outcome of this legal battle could transform the payment landscape for everyone, changing how we shop, how businesses operate, and how much we all pay at the register. In the end, it's a fight that touches every shopper, every business, and the future of how we all pay. After years of legal wrangling, a new settlement is on the table. It aims to do two big things: lower swipe fees and give merchants more control over which cards they accept. The fee cut may seem small, but across trillions in transactions, it means billions in savings. More importantly, merchants could finally reject high-fee premium cards and accept only the ones that make sense for their business. This flexibility could spark real competition among card issuers to lower fees. Small businesses might opt out of expensive rewards cards, while big chains could negotiate better deals. The power dynamic shifts, merchants get more say, and banks must compete for acceptance. It's a fundamental change to how the system works, and it could mean lower costs and more choices for everyone. The proposed fee reduction is about 0.1%, tiny on a single sale, but massive in aggregate. For a mid-sized store, that could mean thousands in annual savings. For a national chain, millions. These savings help businesses invest, hire, or keep prices stable. The settlement would also lock in lower rates for several years, giving merchants predictability. While you might not see prices drop overnight, the competition could slow future price hikes or improve service. In a tight margin industry, every fraction counts. The real impact is in the stability and control it gives to businesses. And in a competitive market, those benefits often trickle down to you. It's not flashy, but it's a meaningful shift. Sometimes the smallest changes make the biggest difference. The biggest shift? Merchants could finally pick which cards to accept. No more blanket, honor all cards rule. Businesses could say yes to basic cards, no to high-fee premium ones. This forces banks to rethink their fee structures or risk having their cards rejected. For a small bookstore, refusing expensive cards could mean the difference between profit and loss. Customers would still have options: pay with an accepted card, debit, or cash. This change could lead to more transparent pricing and real competition among card issuers. Some stores might accept all cards, others only the affordable ones. Financial institutions may innovate, creating new cards with lower fees to win back merchants. For the first time, businesses get to choose, just like with any other supplier. It's a new era of payment flexibility. Another key issue is surcharging, adding a fee if you pay with a credit card. Previously banned by card networks, surcharges are now allowed in most states, though few merchants use them. The settlement could make surcharging more common and transparent. You might see a posted fee for credit card use, making the cost clear at checkout. This could influence your choice: pay the fee for rewards, or use debit or cash to save. Gas stations already do this with cash discounts. Soon, more retailers might follow. Surcharging shifts the cost to those who choose credit, rather than spreading it to everyone. It could mean lower base prices for all, with only credit users paying extra. The hidden cost of rewards becomes visible, letting you decide what's worth it. It's about transparency and choice. This isn't the first settlement in this long-running dispute. A previous $30 billion deal brought temporary fee cuts and rule tweaks, but merchants felt it didn't go far enough. Once the deal expired, fees crept back up, and the honor all cards rule stayed in place. Merchants want lasting structural change, not just a short-term fix. That's why this new settlement focuses on real competition and merchant choice. Both sides are wary, learning from past mistakes. Billions of dollars and the future of retail payments are at stake. The details matter more than ever. So, what does all this mean for you? Soon, you might see more cash discounts, credit card surcharges, or even some cards declined at smaller shops. You'll have more information and choices at checkout. For businesses, lower fees and more flexibility could mean better prices, service, or investment. The goal: a fairer, more competitive system that benefits both merchants and shoppers. The details are still being finalized, but the impact could be significant. The hidden costs of credit cards may finally come into the open, and that's a change worth watching.